The Nifty reclaims 23,100 amidst a broad-based recovery. It's a Wednesday afternoon. The time is 1:30. You're watching Midcap Radar. I'm Reema. With me is Vivek, and we're coming to you live from the CNBC-TV18 Motilal Oswal studio. And Vivek, it's good to see after the deep shade of red in the morning, all indices are now back in the green.
In a matter of 2 hours, from down 3% as far as the mid and small cap indices are concerned.
Remarkable recovery.
What a good recovery. But we have quite a lot lined up on the show. Let's start off with the top headlines. Sharp recovery on Dalal Street from the day's lows. Key indices now in the green. Midcap index off over 1,400 points from lows. Financials in the green, while realty and industrials are the big losers.
Sales share surge over 4% following its Q3 earnings. The company's net profit nosedived 66% year-on-year. With sales volumes rise 16%, beating estimates of an 8% increase. EBITDA too better than street estimates.
Life insurance stocks rally sharply from lows as the new income tax bill does not change the preferential corporate tax rate for life insurers and removes the overhang on the sector. Investec says that removal of preferential tax treatment would have impacted margins for listed life insurers.
HAL shares recover after the company assures it will start delivering the Tejas airplane to the Indian Air Force with the technical difficulties now being resolved. This allays concerns about reports which were raised by IAF chief AP Singh in this connection.
Ircon slips over 8% following a weak third quarter, with sales revenue declined 10% while profit dips nearly 65%. The company's operational performance remains steady as the EBITDA margin is largely unchanged at around 8.2%. Well, the story of the market today has been the very sharp recovery that we've seen as far as the broader end of the market. The advanced decline ratio, which was very weak, almost 1:10 at one point of time, has now recovered very sharply. This is our special segment, Midcap Movers. Vamakshi standing by the wall to take us through the midcaps that are moving around in the session.
Well, absolutely, Vivek. Such a great recovery for all of the indices, right? And let's look at the positive side of things. Let's start off with the top gainers. Campus Activewear is a counter that is surging by almost 7% in trade. Inox Wind, LD Equipment, as well as HPL Power Systems are some other counters that are seeing a very strong recovery in trade today. And all of these counters are up anywhere between 4 to nearly 6%. Apart from that, on the flip side, we also have some stocks that are still under pressure. Archean Chemicals is one such counter, down nearly 7%. Sammaan Capital reported numbers a few days ago. The stock is still under pressure, down nearly 6%. Amber Enterprises as well as Tata Invest are some other counters that are reeling under pressure today. But on the flip side, we have a lot of these capital market themed stocks that are a buzz. Look at CAMS. That stock is trading near the day's highest point, up nearly 4%. BSE is another counter that has seen a very good recovery, up nearly 4%. Angel One as well as MCX are some other counters that are up and away in trade today. Lots of earnings reaction as well. Let's look at some of the stocks that are reacting positively to the numbers. That includes Bajaj Healthcare. That stock is seeing an uptick of almost 10%. SAIL is up and away in trade today, up nearly 5% on the back of that volume growth beat. MOIL, on the other hand, is up nearly 3%. Apart from that, there are several stocks that are reacting negatively to their numbers. That includes Gensol. That stock is down and out nearly 13%. Sri Renuka as well, seeing a miss on the operational front. The stock is down nearly 6.5%. Ircon as well as Kirloskar Oil are some of the other counters that are down and out in trade today.
Thank you very much for that. Get into a break. On the other side, we'll get chatting with the management of Awfis Space Solutions. It's a co-working space. You reported the Q3 numbers, a strong 40% plus jump in the company's top line. We'll get chatting with Amit Ramani.
Welcome back to Midcap Radar. Well, as you can see on the bottom of your screen, the numbers of Ashok Leyland have been declared. Prima facie, the numbers look to be a beat versus the CNBC-TV18 poll. The stock higher by close to 4%. But as promised, we have a management waiting by. Amit Ramani, the CMD of Awfis Space Solutions, joins us now to discuss Q3 results. Thank you so much, Amit, for once again joining us. You spoke to us at the end of Q2 as well. A much more improved performance coming in as far as Q3 was concerned. Can margins sustain at these levels, and what was the occupancy rate as far as Q3 was concerned? Where do you expect to end FY25 at in terms of occupancy?
So very clearly, the margin improvement is a result of our operating efficiencies, obviously better client profile, clear focus on making sure we have the right operating leverage. And all of these factors, including occupancy, have made a difference and made the margin improvement. Our guidance for the year was about a 1.5% improvement, and we are already touching almost 4% from 10.5% to about 14.7%. So I think the margins will continue to hold, in my view. Again, as I said, I won't want to comment on the future projections, but at least for the next quarter, we feel strongly that the margin will continue to hold. The occupancy, as we have reported in the past, the blended occupancy is at about 73%. And the more than 12 months occupancy, which are centers which are a bit more mature, is at about 84%. So I think both are continuing to hold well. And I think for the foreseeable future, we think the occupancy will hold. And we say that with a lot of confidence because we were looking to add about 40,000 seats this year. And this year, for the 9-month period, we have sold about 40,000 seats as well. So the pace of new seat addition and new seat sale is keeping in sync. So we feel strongly that the occupancy will be maintained.
Amit, you've been surpassing all your estimates on margins, you already said, versus estimates of a 1.5% increase. You've done nearly 4%. Even on the top line, I think your guidance was 30% plus. First 9 months, you're tracking 41% in terms of a top line growth. Are you going to end with a 40% kind of growth? And what would be the new seat count addition guidance for the full year?
Rima, I wouldn't want to comment on the future projections here, but I think while H1 was strong and H2 will be stronger. So that's the guidance I would like to give. We were looking to add for FY25 about 40,000 new seats, and we have 120,000 seats that are operational across 193 centers. We also have another 20 plus thousand seats that are under fit out, and another 20,000 seats that are at a letter of intent stage. So we have clear visibility of 135,000 going operational by March of 25. And we have another 25,000 seats which are either under fit out or under LOI. So we feel strongly that the next year also seat addition is going to be at least at par, if not better.
But just to end the year with, instead of 30% plus, can you, considering how strong H2 is, we should be at 40% plus top line growth?
The momentum will continue. Rima, again, I wouldn't want to comment on specifics here, but the momentum will continue. I think the seat addition, our bets in both tier 1 and tier 2 cities. We added Lucknow to our kitty. We have 18 tier 2 cities. All the different bets that we had initiated once we planned out the year, I think have all done well. And I think as a result, the numbers are speaking for themselves.
Amit, what percentage of the total contracted portfolio comes up for renewal at the end of FY25? Typically, when you go in for a releasing or for a renegotiation of the contract, at what rates are they happening? Are they happening at par, higher or lower?
So I won't have, Vivek, the exact number, but typically every year I would say about roughly between 10 to 12 centers come up for renewal, right? Typical renewal cycle. Now, you recall our model, which is managed aggregation. And in a managed aggregation scenario, there is no rent as such. So it's more of a profit share, typically a 70-30 kind of a split. So that continues, right? That's how the renewal happens on those properties. On the straight lease depends on the micro market. Obviously, in the micro markets where the base rental has gone up, then clearly we are obviously, given to pay that higher rental because the market governs the rental itself. And we are in a straight lease scenario, we will most likely match that market rental. Rentals have gone up. We this year did about 77, we will end up doing 77 million square feet of commercial real estate gross leasing, the highest ever in the history of India. Co-working itself will end up doing about 15 million square feet, the highest ever in, again, the history of co-working in India. So the market is very, very strong. And as a result, obviously, the rental rates have gone up as well.
Possible to put a percentage to the average rental increase? And secondly, say by the end of FY26, how many cities or centers will you be present in?
So I'll answer the second question first. By end of FY25, we will be close to about 220 odd centers and close to about 135,000 seats. We will be live across 18 cities and almost 60 plus micro markets. In terms of the rental increase, Rima, honestly, it is driven by every market is behaving a bit differently. But it is safe to say it has gone up by anywhere between 5 to 50%. I mean, there are micro markets in certain cities where the rentals have gone up as high as 50%. But the average, I would say, is somewhere around about 18 to 20%.
Understood that. Thank you so much, Amit, for joining us, giving us a sense of how Q3 panned out and what exactly is expected as far as upcoming Q4 and FY26 is concerned. Let's now slip into a short break. On the other side, management of Suraksha Diagnostic joins us on the other side to discuss their Q3 results and the way forward.
Welcome back. Ashok Leyland is a stock on our spotlight right now, up 5% post Q3 numbers. Sud is here with the details.
So it's an all-round beat by Ashok Leyland for Q3 FY25. Profit, revenue, EBITDA, margin, everything has come in better than estimates, led by increased contribution by MNHCV, for which volumes were higher both sequentially and year-on-year. Sequentially, if you take a look, it was up 2% year-on-year, and sequentially it was up 7%. Even realization, which was expected to be flat both year-on-year and sequentially, but year-on-year realization has improved 4% because of pricing discipline. Now talking about the main numbers, profit has increased 31%, has come in at 762 crore. Revenue is higher by 2%. It was expected that revenue might fall by 2%, but it has come in 2% higher at almost 9,500 crore. EBITDA too has jumped by 9% to 1,211 crore, and margin has made a sharp jump. It has come in almost nearly 13%. It has come in at 12.8% versus 12%. Expectation was of around 11.8%. So it has beaten expectations with major improvement that it has seen. Now we'll have to see what exactly is the outlook that company gives for CV industry, because for H2, for the industry, there was an expectation that CV industry would see a major growth led by MNCV sector.
Thank you so much, Sudarshan, for joining us, giving us a quick take as far as Ashok Leyland's Q3 results performance was concerned. Stock now trading near the day's highest points, up over 5%. Well, moving on, Ritu Mittal, the Joint MD and CEO, Suraksha Diagnostic, joins us to discuss the Q3 results. Thank you so much for joining us, Ritu. First up, as far as Q3 was concerned, give us a sense of volume growth, give us a sense of realization growth, and Q4, how has it started so far?
So as far as Q3 is concerned, our growth year on year has been around 14.5%. Our EBITDA margins have gone up by 16.7% year on year, and our PAT margins have gone up by 31.9% YOY. And the quarter 4 is a stronger quarter for the diagnostic industry. Quarter 3 is actually a muted quarter for the whole industry because of the festive season and the winters being there.
So even for 9 months, Ritu, you've done about 14% top line growth. Is that the run rate that should continue in Q4, or can you push it up to 15% for full year considering Q4 is stronger? And give us a sense about the realization and kind of volume growth you've seen.
So I think we can definitely push up the growth to around 15%. And I would like to mention that there were some external factors that have affected the growth. Factors like the doctors' strike that happened in Bengal disrupted the business for around 4 months, and operational challenges related to Bangladesh. And you would appreciate the fact that East India or West Bengal has a lot of inflow of patients from Bangladesh. That has also affected our growth to a little extent. But we are in the process of recovering. The doctors' problem is totally solved. Bangladesh is still muted because they are not getting medical visas. And therefore, the hospitals in East India are also seeing an impact.
So, that's exactly what even Apollo Hospitals mentioned yesterday, that, they did see some impact coming in from the fact that Bangladesh medical tourism was impacted. Give us a sense of the competitive intensity as far as the eastern market is concerned. We understand there are quite a few players there. In other parts of the country, there have been price hikes that have been undertaken as far as some diagnostic companies are concerned. Any price hikes on the anvil?
So typically Suraksha does price hikes in alternate years, and we had done a price hike last year. So next year is the year that we will be taking a price hike. But Suraksha has a premium pricing, and that is because of the brand and the B2C connect that Suraksha has with the Eastern India market.
Ritu, what percentage of your revenues typically come in from Bangladesh in terms of medical tourism? Because that's been impacted, and what were the numbers like?
So the numbers would be around 7 to 8%.
Okay, historically, and in Q3, this number came down to
almost 2%.
Almost 2%.
Ritu, the other question we want to ask you is that you've always mentioned that you are open for inorganic growth. Anything on the anvil, what are the kind of opportunities that you're looking at? And the second question is, compared to your peer profile, you enjoy much superior margins. Can that sustain as you grow?
So as far as acquisitions are concerned, we are definitely actively exploring opportunities. And as and when we finalize on something, we will definitely bring up the acquisition. And thanks to the listing, we are also getting a lot of incomings.
Oh.
And
all right. Yeah, you were telling us you're getting a lot of incomings, a lot of offers.
Yes, we are.
So how soon might you close the acquisition?
I think by Q1 next year.
Q1 next year. Thank you. Thank you very much, Ritu, for joining in. That's Suraksha Diagnostic saying the Q3 was impacted on account of the doctor strike in West Bengal and Calcutta, and plus reduced patients from Bangladesh for their testing. So typically Bangladesh contributes 7% to their revenues. That number came down to 2%, but historically Q4 is better, and the company might be able to push the full year revenue growth number to close to about 15%. And eyeing an acquisition perhaps will come through in the next 2 quarters. Well, okay, that's...
Markets have given up gains, that's what's happened, especially in the last half hour. The small cap index, the mid cap index are both back into the negative territory. The Nifty has cooled off quite significantly. So mid cap index, marginally in the red after the very steep recovery. Some two-wheeler stocks, they are the ones that are taking a bit of a beating. Look at Eicher Motors, look at Bajaj Auto. They are the stocks that are seeing some selling pressure. But Ashok Leyland has managed to hold on to its gains after the strong set of numbers. But with that, it's all the time we have on this edition of Midcap Radar. Let's talk money up next.